It's March 10th, JLD here, and welcome to MSTR today in the Treasury Titans. Nothing in this video is financial advice, and Michael Saylor just wants us to know one thing: just Bitcoin. Just Bitcoin. Everything else is noise, and he has proven that every single day with these monster purchases. And Michael Saylor actually wants us to know that Stretch traded $297 million today with a 30-day volatility of 4%. This is absolute insanity. This is working out exactly like Michael Saylor and Strategy drew it up. I just know Michael Saylor has this grin on his face because he knows that it's working. He knows that it's happening. He knows that it's inevitable. He just loves the fact that it is happening so fast. I mean, remember, Stretch was launched over the summer. I mean, this is insanity. And then I had a pretty fun post yesterday because if you guys listen to the show every day, you heard me comment on Fong's post, which down here, it was stretching before and after training tends to improve performance. And I read that and I'm like, before and after training, I'm kind of looking at those words before and after, and I'm thinking about it. And I feel like, you know what? I think he's trying to say something without just coming out and saying it. And I went ahead in yesterday's show and I said, I think MSTR is trading Stretch. I should say, I think Strategy is ATMing Stretch in the pre and post market, which, by the way, is significant because yesterday there was over 400,000 K in volume in the pre market. So these are real numbers. And again, Stretch's ATMing was higher than any of the estimates. Stretch.live and the other estimates that are out there, it was higher by like 1,000 Bitcoin than these sites were predicting it was going to be. So this was all kind of coming together. And I made that comment, and then I had to just follow up with this post, which says, amazing. If you listened to my show today, I suggested Fong's post might possibly mean that Strategy is ATMing Stretch in the post and pre-market hours. This would be huge as there was over 400K in volume in the pre-market hours today. And again, I posted this yesterday. Well, lo and behold, look at what the 8K says in the fine print. It is happening, my friends, and it is glorious. And this is some fine print where, let me just kind of get down to it, where it says, shall not apply to or prohibit Strategy from appointing a second agent to effect sales of such class or series under the sales agreement before 9:30 a.m. and or after 4 p.m. New York City time on such trading day. So Strategy continues to be able to appoint an additional agent to execute block sale transactions after 4 p.m. Long story short, they're saying we can and will trade, and we can and will ATM trade Stretch shares, ATM Stretch shares in the pre and post markets. And as you can see, 10,000 views, 210 hearts, 23 reposts, 9 comments and counting, 5 bookmarks. People are loving this news because they know that now you cannot get around the Stretch ATM. Stretch is going to get you all the way through the pre-market, during the market, the post-markets. We are just going to be stacking Bitcoin. So this was amazing. I love that Fong came out with kind of that little hidden meeting. And, listen, it's just fun to be a part of the Strategy team. And I hope you're enjoying this. Adam says, this is insane. Stretch volatility is almost down to zero ever since the biggest nominal price drop in Bitcoin history on February 5th. Strategy strips Bitcoin of its volatility and gives you 11.5% returns with 1/3 of the volatility. If stress tests on Bitcoin of that magnitude aren't enough to affect volatility longer than 1 day, how do billions of dollars not flow into Stretch? The demand for leverage on a highly liquid, high yield, minimal volatility asset is going to be insane. Gear up, kids. The game is just starting. And look at Bitcoin, 3%, gold, 2%, silver, 5%, SPY, 0.74, Stretch, 0.27. Volatility is essentially going towards zero. Mark says, Stretch ended with 295 million of volume, the highest in a month, probably nothing. I mean, look at these numbers. 2 days in a row, 266, then 295. Absolute insanity. Oh, incredible. Ragnar says, It still strikes me how few people truly understand strategy and especially the stretch model. Some people think yesterday's purchase was pure leverage and fail to understand that 2/3 of the capital raise was through the common stock. Other people still talk about the liquidation risk. Mind you, they are not random people. These are professionals who in many ways I deeply respect. The knowledge level of regular Joe is much worse. As Satoshi said, if you don't believe me or don't get it, I don't have time to convince you. Sorry. Just remember this. Their failure is our opportunity. And by the way, my friends, this is our opportunity. You are seizing it. I am seizing it by listening to this show, by following strategy, by investing in MSTR. Oh, it's amazing. Chris says, let's put this into perspective. Through Stretch, Strategy was able to raise $377 million in 1 week and buy Bitcoin, which increased Bitcoin per share by 0.27%. Insane. This is during a bear market. This is with Bitcoin down almost 50% from its all-time high. This is when indexes were down on the week. This is during a full-scale war in the Middle East. Stretch did $750 million in volume. Stretch is less than 8 months old. This is wild. Axel says, Saylor just bought $1.28 billion in Bitcoin in a single week. MSTR stock is down 72% from his peak. How is he still printing billion-dollar buys? Preferred stock. And it's more clever than most people realize. Quick background first. When MSTR was trading at 2 to 3x MNAV, Saylor's playbook was simple. Issue common stock at a premium, use proceeds to buy Bitcoin, Bitcoin per share goes up, stock goes up, and repeat. Beautiful flywheel. Worked perfectly during the bull run. Then January happened. The MNAV crashed to 1.03. Selling common stock at 1.03 MNAV diluted shareholders for almost zero Bitcoin gain. Flywheel breaks. And I will actually say it never broke, but he's doing it for dramatic effects. So Saylor pivoted quietly. He built a completely separate capital stack above the common equity preferred stock, 4 instruments, $29 billion and dry powder. The genius part. Preferred shareholders don't want Bitcoin exposure. They want yield, 10 to 11.5% annual, stable $100 par value monthly income. So Saylor sells yield to income investors, takes their cash, buys Bitcoin. No common stock solution. Bitcoin per share keeps going up. Common shareholders don't feel a thing. Stretch is the main weapon right now. And then he has this little chart down here of Saylor's Bitcoin money printer. And I would just say it is an absolute printing machine. Look at the biggest buy since January, 17,994. I mean, it's becoming staggering. Adam says, y'all aren't thinking big enough. Just wait until people really start to lever Stretch 2x and 3x, and Stretch has a credit rating and strategy is in the S&P 500, $4,000. MSTR is the floor. And if you're not having a good time with Stretch.live, a 6.5, I would definitely follow this website, Stretch.live. It's just fun to look at during the day. And they posted yesterday, 6.5x surge at 12:08 p.m., 21 shares this minute. Stretch at $100.02, 717 Bitcoin estimated today. Day 6 of the streak, already passed 700 Bitcoin, and it's only midday. And this is just like some graphics they show of what's going on with a volume surge. They're doing a really good thing here. I did comment on a couple of their posts of like, okay, Stretch.live, you're doing a great job. It's time to start incorporating pre and post market hours because now that story has been broken. Let's incorporate it. So we'll see how long it takes them to do that. Hopefully sooner than later, because they estimated about 1,350 Bitcoin yesterday for MSTR, but the number is likely higher because they did pre and post market sales too. So if they want to stay accurate, they got to keep it updated. MSTR owns 3.5% of digital scarcity. The digital gold rush is upon us. 20 million Bitcoin have been mined. 1 million left. Think about that. Just 1 million Bitcoin left. Michael Saylor is going to buy so many of those. Tycho says, people call strategy a Bitcoin company, but it's actually a structured finance vehicle. Bitcoin equals the collateral pool. MSTR common equals equity tranche. Prefs like Stretch equal senior tranche. Saylor didn't reinvent corporate finance. He tranched a commodity. Think about that. He tranched a commodity. And the only commodity that's being capable of doing that, or that's capable of having that being done, is Bitcoin. So Rohan says, yep, likely close to 1,000 Bitcoin today already. And of course, that was only at 12:24 p.m. They likely closed with somewhere around 1,500. I don't know the exact numbers because I don't think anybody's tracking the pre and post, but definitely over 1,300, definitely over 1,400 in my opinion, maybe close to 1,500. Hermes says, Stretch did 3 million in volume today, or 3x the 3-month daily average. Absolute insanity. And then Stretch to post the end of the day. New estimated daily record, 1360 Bitcoin. This was not even close. Blew past Friday's 1,069 Bitcoin by 27%. 2.4 million shares went through the ATM. The machine isn't just running, it's accelerating. And again, it's even higher than 1360 because Stretch.live is not yet counting pre and post, which is really exciting. So as you can tell, it seems like we finally just really started clicking on all cylinders. It just once again feels exciting and great to wake up and to do this show because you stuck with us through the downturn, through the months and months and months of it grinding down to a 1x MNAV, and then now making the turn and seeming to head back in the right direction. Now all we need is Bitcoin sentiment to shift. As I'm recording this, we're around 70,000. Maybe it's creeping up on 71,000 Bitcoin. We'll see where that ends up by the time you watch this, but hopefully a good day is going to be descending upon us where Stretch is crushing it once again. But man, it's just so much fun to be tracking all this stuff. Congratulations, whatever path you took to find yourself here to listening to this episode. Congratulations, because you get it. And if you are like, well, I don't know if I quite get it, you are getting it. And I will get you there because strategy is just humming on all cylinders. Nothing's going to stop this train. There is no second best. And I've got a great clip from MicroStrategy coming up as soon as we get back from thanking our sponsors. If you're building in the Bitcoin era, structure matters. Treasury strategy, capital allocation, entity structure, it all starts with a solid foundation. And when you're ready to form your business the right way, Northwest Registered Agent helps you do more than just file paperwork. With Northwest, you don't just create an LLC. You build a complete business identity from day one. That means registered agent service, a real business address, operating agreement, domain, website, professional email, phone number, and built-in privacy. No juggling vendors, no sketchy upsells, no selling your data. They've been doing this for nearly 30 years, and they're the largest registered agent and LLC service in the US with over 1,500 corporate guides, real humans who know your local laws and actually pick up the phone. Northwest handles everything in-house, which means fewer hands on your data and privacy by default for every customer. Don't pay hundreds or thousands of dollars for what you can get from Northwest for free. Visit northwestregisteredagent.com/JLD free and start using free resources to build something amazing. Get more with Northwest Registered Agent at northwestregisteredagent.com/JLD free.
They won't be doing it anymore, will they? Right. Presumably, the people that are trading with 50x cross-collateralized leverage offshore on Saturday morning in response to a Reuters posting, and they're panic selling Bitcoin, and then they're like, oh, well, the world didn't end on Sunday afternoon. Then they're desperately buying it back. Presumably, those people have a reason to do it, and they're making money, because if they weren't making money, the free market would separate them from their capital, right? There's no quicker way to go bankrupt, right? Okay. So Bitcoin represents the global capital market, and there are people doing things that you can't do, that you won't do, that you don't choose to do, you don't wish to do, and they're doing it with that asset, and that's what's creating the volatility. But it's also creating the gravitational or the magnetic field, which is attracting all of the energy, all the financial energy of the world is being drawn into this space, all of the political energy, all of the digital energy. It's all being drawn into this space because of that utility. And I think you just got to make your peace with it. Either you're short term and you're a trader. If you're worried about what Bitcoin is going to be in 4 days or 4 weeks or 4 months, you're a trader. Call yourself a trader, and then you better have a trading methodology or trading excellence, or be in the trading business, or be neutrally hedged so it doesn't matter to you. You're either that, or you're an investor. You got a 4-year time horizon, and then it just doesn't matter. All you'd be thinking is, a lot of capital is surging into the space, and a lot of attention is being given to the space that otherwise would not be given to the space because of those crazy traders. And let's just let them do their thing, because I'm an investor. I'm holding for the long term.
Well, I'm very passionate about empowering the average individual, and Bitcoin is still primarily owned by individuals. But I just had Lynn Alden on, and she said that retail really did not participate in this last bull market. Why do you think that is? And what will bring sort of the average retail investor into the best savings technology?
I think that the retail investors that are passionate and committed to digital capital, to Bitcoin, I think they found it already. I think that they've had 10 years to find it. So if you're looking for a non-sovereign store of value, bearer digital asset, I think that sometime between 2010 and 2025, you found it in one of those successive waves. And then you bought as much as you could possibly afford to buy. Okay, and that's fine. I think that if you want to draw the next cohort of retail investors, they don't want a 40 vol, 40 ARR asset. What they want is something more like a 10 vol, 10 ARR asset, or a 0 vol, 8 ARR asset. So I think that the way that we draw the mass of investors is you offer them something like digital credit, like STRC, where we say, well, here's 11%. It's tax deferred. We're stripping the vol off of it. Like the 1 year volatility of STRC is less than the NASDAQ, is less than the S&P index. It's less than gold. Right? I'm going to give you an asset which is less volatile than conventional stores of value, but it's a certain, right, straightforward, defined 10% or 11%, and you get it monthly. And you can test this yourself, Natalie. I would challenge you to test it. Walk down the street and find 100 people and say, would you rather have 30% a year over the next 20 years, but you're going to get 40% drawdowns and 40 volatility? It'll be 3 times as volatile as the S&P index. And, some years you won't make any money and some years you'll make a lot of money, but it'll be 30%. Or would you rather have a bank account that pays 10%, where you can take your money out whenever you want, but you'll just collect 10% while you're waiting? Now ask them, take the survey. I would think, like, if you were to say 95% of the market wants a 10% bank account they don't have to pay tax on, and only 5% wants the 30% a year, I think that that's optimistic. Like that's probably too pro Bitcoin. I don't think 5% of retail investors want to hold Bitcoin and collect 30% a year tax deferred with a volatility that's double or triple the S&P. Like you might find differently. I would suspect it's possible that number is 1-2%, right? So the great mass of the retail investors, they want something which is 2x or 3x or 4x better than a bond fund. Or they want something that looks like the S&P, but without the drawdowns of the S&P. And so we're going to attract retail investors to the ecosystem when we take the best of equity, the best of credit, and the best of crypto, and we put the 3 together. So what does that mean? Doubled equity is double-digit returns and tax-deferred gains. Credit is price stability, principal protection, and low volatility, and a very defined yield, like defined, consistent cash income. Crypto, Bitcoin, is digital innovation, right? Transformation, and 2, 3, 4x the productivity of the conventional economy, right? It's massive growth. What's the second best? There is no second best.